Hello and welcome back everybody to the M&A Monthly Podcast. It's Lewis Williams here and I've now been joined by our new permanent co-host, Co Beeden. Hello, Co.
Hello, Lewis. Pleasure to be here as always.
As always. So it's been a busy month, everybody, in the M&A world, and we're going to change the structure of the episode slightly. It's going to be one part from now on, and we're going to approach it where we have a monthly roundup at the start before going into one deal each that has particularly interested us. So we'll start off with the monthly roundup.
Right, so we're starting the monthly round off with a quick update from one of the stories we did last week, the one I covered, which was the Thermo Fisher and Kaizen merger. So last week we talked about the reasons why it could fail, and one of them being that the shareholders weren't too happy, and some of the major shareholders were saying they weren't going to give up their shares. And this in fact did actually happen. I think 47% of investors in Kaizen had tendered their shares, which falls short of the 66% that's needed, which is 2/3.
Right.
So essentially, not enough people wanted to give up their shares to Thermo Fisher, so the deal couldn't go through.
It was over a valuation, wasn't it? There was a difference in opinion in terms of the deal price agreed and the valuation.
Because obviously Kaizen's very linked towards coronavirus, and they've seen a boom in demand.
Yeah.
And the shareholders felt like their shares were worth more and didn't want to give them up.
Yeah, and that actually leads on nicely because in terms of the M&A space, the biggest deals that we've seen this month have all been in the pharma sector, which has been a top performer in terms of people who are looking to invest in stocks and shares at the moment. So just to round up quickly, we've had Aviva who bought OSI Soft for $5 billion, who are a pharma technology company, which essentially increases Aviva's stake in technology moving forward. So that was almost like an assets under management play, trying to move into that sector. We have Blackstone who took over Takeda, their counter pharmacy part. So Takeda is like one of the top Japanese pharmaceutical companies, so a bit like Lloyd's Pharmacy over here in the UK. They essentially bought out their over-the-counter pharmacy operations for 2.3 billion. Then moving over to Johnson & Johnson, who are a household name, they bought the biotech company Momenta for 6.5 billion, which is another mega deal. And this is again just a sign of the rapid growth in the industry as of late as a result of the coronavirus.
There's so much money being invested into it at the moment, so it's a very interesting sector.
Yeah, absolutely. And then obviously Google's had a lot of interest at the moment and a lot of movement there.
Yeah, so Google recently have decided to part ways and divest out of Nest, which was one of their companies they had acquired a few years back.
Right.
And they've sold off their product line to ADT, so which is actually a Google partner company.
Right, okay.
And that was for 750 million. But now the interesting thing is, as we all probably know, there's been a recent Spotify deal.
Yeah.
Everyone's been given a free Google Nest.
And it looks like one of those dodgy lad Bible stories, but you can quite literally get a free Google Nest. And again, it sort of raises the point of where the conspiracy theorists come out about how much are they listening to you. But I mean, it's free tech at the end of the day. So while the opportunity is there, I say go for it.
I do think in reality it's more they've got a ton of stock
left over. Yeah, trying to.
Like they just kind of like
it's a
change
promo.
it to a new brand.
Yeah.
It's getting out.
Yeah, interesting nonetheless. KKR, one of the biggest private equity firms, sold off their software group Epicor to another private equity company, CD&R, for 1.7 billion profit. I think the overall was about, if I'm not mistaken, 3.7, and that was after only 4 years of actually since they purchased the group. So a nice tidy profit for the private equity company.
And then the last one of the day is Nestle have purchased a biopharmaceutical company for 2.6 billion, and this is like trying to tighten their grip on food allergy prevention.
Yeah.
And like innovate even into the sector.
Yeah, so again, a massive month for pharmaceutical companies all over the world, and in sort of many different sectors because it is so big. So that was sort of the monthly roundup. But now we're going to be moving on into my favourite deal of the month, which was Blackstone acquiring Ancestry Group for $4.7 billion. to the first deal we're going to be discussing in length today is Blackstone's acquisition of Ancestry.com. The deal cost 4.7 billion and it gives Blackstone 75% ownership of the company. Just in terms of deal facts, Ancestry, those who don't know, is a company which allows people to delve into their heritage. It's now not so single that you can just look at your family tree. It's also now looking at the health side, which seems to be the more growing element. The term genomics is now widely used, which is essentially looking at people's genetics and their family trees, and essentially being able to look at what conditions they may develop later in life, such as cancer risk, blood work, heart health, carrier risk for disease, which is obviously extremely topical right now. And it's essentially hoping that in the future that we'll be able to predict people's health conditions and what they might potentially be at risk at getting in future years before they actually have that disease. So it's essentially looking to predict and preempt any future problems in terms of people's health, which a lot of people, according to Blackstone's senior leadership team, believe is going to be, an increasing importance to many people.
I definitely think that sounds like the more valuable side of the business as well, the bit that they're going to be interested in buying.
Yeah, I mean, originally the family tree element has now been copied, and you've got people like MyHeritage and 23andMe. That's sort of a concept that can be easily copied. There's a limited USP. The only USP is that they have the biggest database, and actually what they found is that there was a nice synergy in being able to transfer that database across, which has actually enabled them to become the leader in terms of the genomics sector as well, because that same information can be used, because it gives them like the wealth of knowing family trees and that kind of thing, and tracing back hereditary family history in terms of the way that people have passed, or potential health problems within families themselves. So that is why essentially Blackstone have purchased Ancestry.com, because it's going to be a growing company in years to come, they hope.
It's interesting. I think if you give a history of the two, then that really are.
Yeah, no worries. Okay, so in terms of Ancestry, they were founded in 1996. They were the first mover in the family tree website idea, sort of industry, as it were, the market. They now have a female CEO called Margot Georgiadis, who Greek name obviously, and may I just say she has one of the best CVs you can write. She is honestly an A-star CEO by the looks of it. Harvard educated, McKinsey and Google performer, previously the CEO of Mattel, one of the world's biggest toys producers, and is now CEO of Ancestry. So in terms of we're looking at intrinsic value from a management perspective, Ancestry have got a really top CEO who is now poised to help them grow and develop as a company. They first launched the DNA element of their business, Ancestry DNA, in 2012, and they now have 18 million people in their database, which actually makes them the biggest. They have the biggest database, is what I'm trying to say, and that's enabled them to essentially gather a lot of intrinsic value within their business, and which is why we see the valuation for the company 6 times over EBITDA, because they are the market leader and they have a significant advantage over other companies that are now trying to move into that sector.
I would say it's a very interesting business model as well, the way it's set up.
Yeah.
So people are paying them to have their DNA tested, but at the same time it's kind of adding value to their company as well by creating this massive database.
Absolutely. And in terms of competitors, they only have a couple. We're looking at MyHeritage and 23andMe. And the reason for that is because, there's such a high barrier to entry, because they have that enormous database, which would take many years and, a lot of years of trying to build a customer base to essentially challenge that. And now that they've built that, they become an extremely valuable company. Anything more to add? I don't know. 23andMe, who's their biggest competitor, they recently were funded and sort of joined as partner with GSK, who's one of the biggest pharmaceutical companies in the world. So it shows again that there is a lot of interest within the industry itself, and yeah, it's a growing company. Moving over to the acquirer, Blackstone. Many of you will already know the company in terms of they are the biggest private equity firm in the world. Founded in 1985 by Stephen Schwarzman and Peterson. Schwarzman, who's a Wall Street legend now, and many of you may also know his son Teddy Schwarzman, who actually is a massive film producer and produced the film The Intimidation Game, which had Benedict Cumberbatch as Alan Turing, which was a great film.
It's a great film.
Great film. Revenues of 7.4 billion last year, and an annual income of 1.471 billion also. So they are the biggest private equity firm in the world, just to reiterate that point. Some huge companies under their management include Hilton Hotels, United Biscuits, and many others. And they also, just in terms of the theoretical side of it, they always try and get in early and get in quickly on growing companies. So a great example of that would be Oatly, the milk company, which is a plant-based drink, which is an alternative for milk, which is obviously capitalizing on the fact that we have a growing number of those who are lactose intolerant, and that company is growing from strength to strength. So that is why we believe that Blackstone is now taking an interest in the website Ancestry.com.
It's definitely a risky way to go about things, but it definitely pays off for them, obviously.
Absolutely, yeah. And I think the thing with Blackstone as well is that it's seen as the pinnacle company for a lot of people who work in the finance sector. So in terms of the quality of management at Blackstone itself, they know a thing or two about buying good companies, which is attributable to their large profits and returns every year.
Yeah, it does help them when you've got that pool of workers that you can draw from. You're getting the best of the best.
Absolutely.
Obviously, they know what they're doing.
Absolutely. So in terms of the product itself, the genomic side of it is really interesting. That was the element that I tried to research more into, because at first you're looking at what is genomics. Genomics is essentially looking at the family history of certain people, those who apply and purchase the service. It essentially allows them to understand previous family health problems, hereditary health issues, and it gives them the opportunity to then proactively think about ways in which they can reduce potential life-threatening health issues later down the line. And if we were looking at it from like a macro perspective, currently the way that we approach healthcare is very reactionary. We're looking at solving problems and symptoms when we get them. But instead, what a lot of professors over in America are saying, there's countless here listed on this sheet, but, the way that we're looking at it is that one day we'll be able to preempt a lot of health problems through having this information, and we'll have a more conscious and a more aware society that we can preempt these issues and essentially then have a much longer lasting life expectancy.
Do you think it'll be the future?
I think so. The more that I've read about it, it definitely seems that it's going to be a long time before we can see it introduced, and there's also some social factors which will draw back, which I'll go on to. But in terms of an idea, as it were, to preempt and be proactive about things is a lot better than being reactive, essentially. And it, in theory, in my thinking, it would enable us to potentially live longer in the future, which is, I think, what Blackstone are going for as well.
I do think as well, especially with us for NHS, it'll be a lot cheaper as well to predict what's going to happen rather than having to spend all the money to react.
Absolutely. And I mean now the way we're seeing cancer and the way that links to obesity and problems like that. It costs the country billions every year, and you don't need to know the statistics to know that is a massive issue within today's society. There's been a large uproar as of late because of it, and you hear adverts at the moment about getting fit and healthy. So it's obviously still a massive issue for governments, and I think that if we could be more proactive in our thinking, and I think we are becoming as a generation ourselves, we are a lot more health aware and a lot more conscious about what we eat and the way that we exercise, etc. Potentially, I think they're capitalising on a good opportunity. However, there is still a large disconnect between the way that we use genomic information and biomedical research. Apparently there's still a lot of teething problems in terms of the way that we're able to clinically analyze a person's genetics and really delve into it. There's still issues in terms of actually understanding and being able to accurately get a person's health and hereditary issues. It's still not quite there, and it could be decades until we can fully get this technology right, insofar as it's going to then actually be accurate and we won't be throwing people off.
I guess, would you say there's a problem with privacy concerns as well, with a private company holding this information? Yeah,
definitely, and that's also been, it's a common theme now. If you're looking at M&A deals, there's a lot of, just Google earlier.
We talked about it last month.
Last month as well, yeah. A lot of people are extremely conscious about who knows what about them, and the sort of personal information that's now being passed freely. And the fact that Blackstone, one of the biggest private equity firm in the world, obviously have a lot of fingers in a lot of pies, would know your private information, would be concerning. Personally, I'm not particularly bothered if it's to the benefit of a lot of people. I think it's for the best, but I can completely understand why others would be nervous about that information being passed on, should being taken advantage of in situations unknown. I don't know, but yeah, definitely there is a big issue about private information, but that has also been clarified by Blackstone. They've said that all personal information that is gathered by Ancestry.com is not going to be leaked or passed over to them. How much you believe that, who knows?
It's exactly what Google said with their merger, wasn't it?
Yeah, absolutely. And they have to, they have to these days. So, they've cleared it up, but it's a social concern that we should definitely be aware of.
So, if they're obviously not sharing the privacy, what kind of motivations would there be for Blackstone to buy?
We've touched on it, but again, it's the potential to be the market leader in the genomics area, to have the biggest database, has immense intrinsic value, and to be well positioned to take the lead in terms of then moving towards a genomically focused healthcare system, which is what we'll likely see in the West because we are far more developed. I think that's sort of their main hope, is that in the near distant future, because we're becoming more socially and conscious about our health, they'll be the key driver in terms of selling that service and actually having that information to hand.
And so for Ancestry.com, what would benefit them about the deal?
I think in terms of the funding that they'd have under Blackstone, they have such a wealth of funds that they can attribute to the company. They also have immense intrinsic value and wealth of management, that they have people who know how to grow companies, and they're extremely knowledgeable and experienced about doing this. I have no qualms that then they could also get further people onto their side. Blackstone themselves have immense research capacities, and their ability to gather statistics about certain areas is immense, because they have such a broad reach in terms of companies under their management. They can really go for it in terms of their ability to research moving forward. So if you were to look at it from Ancestry's perspective, who would you want as your sort of your ownership partner? You definitely want Blackstone. And the thing is now, because they now own 75% of the company, they have a much larger share, and they can actually be a bit more agile in the way that they approach projects. Before, the capitalization of the company was split amongst quite a few different private equity firms. Now it's 75% Blackstone, and there's still one other partner, I believe, another private equity company, but it's mainly Blackstone.
I guess that helps with decision making as well. If there's one big firm,
definitely
key decisions with the company can quite easily happen.
Yeah, and they've because they were previously a smaller partner, and now they've decided to increase that stake. So there's obviously a good cultural connection between the two, and there's already some good links, which enables sort of the partnership, as it were, to further develop moving forwards.
Could you tell me a bit of the financial side of kind of both companies? And
yeah, no worries. I think I'll focus primarily on Ancestry. They actually have quite an interesting financial analysis, because they are a subscription-based company, which essentially allows them to have an extremely steady forecast in terms of their income stream. Because of that, they actually go for quite a high debt to equity ratio. I guess they're also investing a lot in terms of their growing company in terms of the DNA market. So they're investing heavily into increasing that database.
Like you said earlier, it was the high barriers to entry.
The high barriers
cost a lot to
keep them up and also grow further. So they have quite a large debt margin, which a lot of acquirers would be wary of. But it's underwritten by the consistent income stream that they have because of these subscriptions. The acquisition price was 6 times EBITDA, which was due to the potential growth in the market, as we've discussed previously. So again, it's quite a lot, 6 times EBITDA if we're looking at generally deals, but they're a company that they believe can grow. So that's the price that they've agreed.
Exactly, and as the market in general, what's that saying?
So it's actually been quite an interesting case. We've spoken a lot about growth, but actually in the past year, they had a fall in revenue of 1.2%, and the DNA product specifically actually fell 48%. So if we're looking at it, this could be a good time to either push the product and boost it, and hopefully then actually see a growth in the revenue for that product, specifically the DNA one. But again, overall, actually a fall in revenue. So interesting, but obviously overall they're believing that this is going to be a long-term investment. Most private equity deals are 5 to 7 years before exiting the opportunity. So they're hoping that they can turn this around. As of late, Ancestry actually had to let go of 6% of their workforce just to balance out that loss in revenue. But again, it's a long-term market, and many people think, I can't remember the official body, but they've predicted that the global DNA testing market is going to reach 10.02 billion by 2022, which is by the end of next year. And potentially that is actually a figure that could be seen to have increased by then because of the health pandemic this year, which has caused concern for many more. So interesting.
A lot more people becoming aware of their own health and
yeah,
kind of stuff.
I really wouldn't be surprised if that the market size doesn't actually exceed that by 2022. And one other remark which I saw on the comments section of the FT article that I originally looked at was that the fact that when one private equity firm sells to another, what does that show? Often when we have a look at these deals, the private equity firm, they buy the company, they grow it, they add product lines, etc., add value, then they sell it on to another. But, how many times can that keep on happening? Ancestry have gone through quite a lot of ownership companies in the past couple of years. And, the question was, how much more meat is there on this bone? How much more value can be extracted and added to this company before they sort of bottom out? But again, Blackstone believe that they are the person to do this in terms of adding that value.
And I guess, like we said earlier, I think there's a lot of potential for it, but at the same time there is potential for that stuff not to work out, that to be so far ahead in the future.
Yeah.
that in the short term, it might not be worth it.
Yeah, it could be seen, we could well see that this asset doesn't mature as we'd hope it would in the next 5 to 7 years, but could really flourish in, let's say, 15. So it's just, how are Blackstone willing to take that risk? Clearly they are, but how long are they going to keep it under their management? Who knows?
I guess they've got to try and add value in other aspects before the technology can eventually catch up with the ambitions.
Yeah, absolutely. And it's also, because I'm not so scientifically inclined, how close are we to that breakthrough in terms of getting the DNA and the genomic side of it crystal? It could be because of Blackstone's influx of capital. We could well see that is a lot sooner than predicted if they make that breakthrough.
Potentially. It would be very exciting to see what happens in the future.
Absolutely. So we'll close out on that deal now before moving over to your deal, Co.
Today I'm going to be looking at Aviation Gin and Diageo, Diageo acquiring them to Aviation Gin.
Very different, but nice. Okay, let's go into it.
Today is Diageo, a conglomerate of
beverages. That's a nice one.
Alcoholic beverages are planning a deal potentially worth $610 million, trying to expand the range of alcohols. They already have alcohols. Yeah.
Alcohol brands.
So it's very exciting. It's a very exciting deal, and obviously the figurehead of Aviation Gin is Ryan Reynolds.
The beautiful man.
So, firstly, I'm just going to go through a little history of Diageo.
Perfect.
It's quite interesting. It was formed in 1997 when Guinness, who we all know, and Grand Metropolitan merged together to combine their resources and operational capacity. This merger also led to the company becoming public and their IPO. They started trading on the stock market that same year.
Right.
The merger was orchestrated by Anthony Greener and Philip Yee, who were executives at Guinness, and George Ball, who was executive at Grand Metropolitan. So obviously Guinness being the Irish beer. I'm not a big fan myself.
No, me neither.
But it's quite interesting how long ago that was.
Yeah, and then since then they've gone on to become like the biggest in the alcohol market, right?
They're massive. Their tactic of rapid expansion into other brands. So they've acquired most brands, and especially spirits. They started off with Guinness, obviously, but they've really centred in on the spirits market.
I guess from the margins perspective, I'd imagine.
Yeah, because I guess a small amount of liquids.
Yeah, a lot more margin. Because if you think the average price of a bottle of Smirnoff compared to a crate of beer is, I'd imagine the margins are much better.
Yeah. So some of their brands include Gordon's, so the Gordon's Gin.
Yeah.
Bailey's, Smirnoff, Don Julio, and Bell's Whiskey.
All household names.
Yeah, all very massive. You go into a pub and you would definitely see.
Yeah, almost certainly.
So in fact, they used to own Burger King.
Wow.
In their inception in 2002. However, since then they sold it off, and they're specialising especially into the spirits, like I said.
Okay, they don't own any other companies that are sort of outside their niche of alcohol.
No, it's all alcoholic drinks now.
All alcoholic drinks. Okay.
Burger King being massive, it kind of allowed them to expand into a wide range.
Perfect.
So they were the world's largest distiller before being overtaken by a Chinese company in 2017. Seems like it's like a common trend now.
Yeah.
And if you go to a bar anywhere in the world, you're probably likely to see most of the drinks are owned by Diageo.
Unknowingly.
Yeah, exactly.
Yeah. And then Aviation Gin, obviously Ryan Reynolds, the absolute legend.
So American Aviation Gin, also known as Aviation Gin, is a brand of gin first produced in Portland, Oregon by its founder Christian Kronstad and Ryan Majarian in 2006. It is produced by a House Spirits distillery, and it's 7 flavourings. So you use juniper, lavender, and all that kind of thing. I'm not really an expert.
No, it's fine.
But now it's distributed nationwide, and especially the United States. It's massive over there.
Right. It seems like a very American name, doesn't it?
American Aviation.
Yeah, America.
It's also in 15 other countries, however. So,
okay.
But it's much like smaller. I'm guessing in Canada it's a little bit bigger. But it's also in Spain, UK, Ireland, France, and other countries as well.
Yeah.
However, in 2018 is when it had its real growth, when Ryan Reynolds bought a stake in the company and agreed to be the face of it going forward. And to this day, he still promotes the gin on featured advertisements, and he also tweets about it and talking in interviews. Like, whenever I go on Twitter, I actually follow him, and like half his tweets are about Aviation Gin.
Interesting. I have seen an advert, I'll be honest. And it's actually interesting how often this tactic is deployed, where celebrities take a stake in an alcohol company and a brand, essentially, and then build it off the back of their fame.
Yeah, notably P. Diddy and Ciroc.
Yeah.
We all know Ciroc. So kind of they use their fame to make it cool and make people want to buy it, which kind of just boosts like the brand itself.
Yeah, the placement in music videos and that kind of thing is
Definitely,
what helps it, isn't it? Yeah.
Like Crystal Champagne, owned by Jay-Z.
Yeah.
For example, where it's kind of just celebrities using their fame.
Yeah.
Making the name a bit more reputable.
Absolutely. And they're now all under Diageo's control, I believe.
All the ones mentioned, apart from Crystal.
Right.
So there's Ryan Reynolds Aviation, obviously.
Yeah.
P. Diddy's Ciroc. You have Hey Club by David Beckham.
Yeah.
And there's another one later we're going to talk about George Clooney's tequila brand as well.
Tequila, okay,
which kind of paved the way for this merger, actually.
Right, okay. Before that, we'll go into the sort of past couple of years. We'll go Aviation first.
So Aviation Gin, we're going to start off with them. According to the brand, Aviation is responsible for 30% of the gin category growth in the US. So the whole, I think it's premium gin. They're responsible for 30% of the growth in the US. This can be attributed to they had a 100% increase in sales volume over the past year, or before 2020.
Impressive.
Which is very impressive for a company operating in quite a slow growing market, the spirits market in general.
Yeah.
So it's very impressive that they've gained this market share so rapidly.
Absolutely. And I wonder what alcohol consumption is like in America, because I know for sure in the UK it's slowed in the past few years as we become more conscious. But yeah, interesting that it's growing so much and that it's a premium brand as well. And I think that would interest Diageo particularly.
In the past year, the gin sector in general had a 3% rise in 2019 over 2018. So
right.
In America, it's a very small growing one.
Yeah.
But most of this growth was the super premium gin category. So this is bottles costing $25 and upwards.
Wow.
Which Aviation Gin falls under. So their bottles are 27, so it's only just premium.
Yeah.
But
it's not crazy expensive, but it's still premium.
Yeah, it's more than I'd be paying for.
Yeah. Poor uni students like us.
But in general, the market's growing slower, right? But the section that Aviation Gin is actually doing really well.
Okay.
So Aviation Gin is now available in many countries, and they've got further plans for international expansion on the horizon, according to them.
Right.
In the UK, specifically, the brand's only available in 270 Asda stores, which is quite a few.
Quite a few.
And 60 Waitrose outlets, and that's it.
Okay, yeah. So they haven't quite gone the full hog in the UK yet. Still waiting for other players like Tesco, Sainsbury's to hop on board, which is potentially something that Diageo could help with.
Yeah, even your local corner shops and stuff.
Yeah, your co-ops, etc.
You're waiting for them to get into that, and then so they probably hit the UK. So it's just kind of like the next market they're looking to rapidly expand into. Yeah. Which is especially a good idea, because gin is massive here.
Yeah, absolutely. Yeah. So especially in the summertime, I think it's probably quite a seasonal thing, maybe, gin and tonics in the summer.
Definitely.
Okay, let's move over to the acquirer side, Diageo.
Diageo, they're a absolute giant in the industry in the last year. But however, in the last year, their share price has dropped 28%. Which actually can be attributed to a drop in profits of around half.
Interesting.
From $4 billion to $2 billion in their recent annual report.
Any particular reason why, or?
So I think the main reason for it is the COVID-19 outbreak, with most businesses now seeing a decrease.
Right, so
profits.
They're not getting so many corporate clients, pubs and clubs were closed for a long time. Very understandable.
I mean, You actually say that, but the main reason is actually their costs have increased.
Oh, okay.
Which is actually very interesting. So their revenues have remained pretty stable, only dropping 1 billion, which sounds like a lot, but it's down from 12 billion to 11 billion, which is only an 8% fall compared to 100% drop in profit.
Wow.
Or 50%.
Yeah.
Sorry, 50% drop. And Diageo have also gotten a 12% profit margin, which is mostly to do with their diverse range of products. So having low risk, and they also allow for cost synergies between the businesses. So like development of brewing technologies, for example.
Right.
So between business to business, they can have the same technology and the same professional advice and stuff like that. It really allows that.
So in terms of then the cost rising, what was it? Is it sort of like the actual product itself, like the alcohol, or was it?
I think it was more administration costs to do with the business.
Right.
So like work, having to lay off workers and
Okay, so I guess they had to close distilleries and things like that.
Yeah, which actually cost quite a lot.
Okay, interesting.
However, in the last few years before this, so if you take COVID out of the way, their incomes have actually been rising about 14% annually from 2017 to 2019. So, and in addition to this, they've also expanded their brands with Aviation Gin, but with others as well. So with horizontal integration, obviously, they acquire other alcohol manufacturers. So in 2019, Diageo brought a stake in Seedlip, which is a non-alcoholic spirits brand, which obviously they're becoming very popular at the moment.
Absolutely.
For people trying to move away from alcoholics, get a step ahead. And as well as Casamigos, which is the George Clooney brand I wanted to talk about.
Right.
This is a premium tequila brand owned by George Clooney. And this move probably helped them in acquiring Aviation Gin to the merge to go through. Because as we said, in a similar way, George Clooney helped them grow, like Ryan Reynolds has helped Aviation grow. Yeah,
so it's like a blueprint. Repeatable.
They bought George Clooney's for about 700 million.
Yeah.
And since then it's been very successful, which has made them go, you know what, we can
do it again.
Exactly. So,
bro, I guess in terms of the deal, sort of the driving forces, the sort of the factors behind it. I know you've spoken then just about sort of previous deals that they've done, but is there anything different that could potentially be a driving force for this deal to happen?
So the deal itself is actually quite set up in an interesting way.
Okay.
Why Diageo would want to go about doing it. So they're buying the group of alcohols called Davos brands,
right,
which majority is Aviation Gin, but it just includes there's a tequila brand and then a Japanese whiskey brand, I think, and it's an initial payment of 335 million, which is a lot more than the thing was worth earlier.
Right.
But for this, they'll also pay out an additional $275 million if the sales of the brand continue as they're going now.
Okay, that's an interesting clause.
So this means at the moment they only have to pay 335 million for the brand itself, so it's actually very low risk.
Yeah.
I think they're worth a bit more than that, but the premium they're paying to split the costs is probably a bit more.
Yeah, that's interesting. I didn't realise that there are other brands under the group as well. You know, the other two.
Mm-hmm. So it also seems likely that these brands, and especially Aviation Gin, will continue to grow as we talked about their expansion in the UK. As in the UK, the premium gin market actually grew 30%.
Okay, interesting. Comparing that to the 3% in America.
Yeah, it's very interesting. And as part of the deal as well, Ryan Reynolds, the face of the company, he still holds a stake in the business as part of this.
Right.
And he has agreed to continue to promote the brand. That was the main driver for the success. So he's agreed to be the face of the brand for the next 10 years.
So it's almost like a silent takeover, really, in terms of the consumer-facing company. You wouldn't really see much of a difference potentially, but what we will see is the wealth in management that Diageo will bring to the company in terms of pushing it on.
Yeah, I'll say that, especially looking at the past, I think it was key for Diageo to keep on Ryan Reynolds because that's the main driver of the success.
Yeah, he's closely linked to the brand now, so why would you take him away, I guess?
Yeah, so I'm guessing he's going to do quite well out of it as well.
Yeah.
As a high monetary incentive for that. But overall, I don't think there's any reason why the deal shouldn't go through.
Yeah.
So both parties are very happy with it. Diageo have a strategy of acquiring brands that have a high growth, like we talked about earlier.
Yeah.
With your story, and in a statement by the CEO, he said, pretty much following up on this, the acquisition of American Aviation Gin and Davos brands portfolio is in line with our strategy to acquire high growth brands with attractive margins that support pre-minimisation. And we're looking forward to working with Ryan Reynolds and their team.
Yeah, for me it's super interesting that the premium gin brand had such growth in the UK in the past year, but the extent of how far is that going to grow, I'd be interested to compare that to non-alcoholic alcohol, as it were, like the 0% alcohol alternatives, and how much that is growing, because I would have thought that would have been the market to go into. I'm sure they are, but I would have thought that would have been like the high growth area in terms of alcoholic drinks at the moment, and the way that they would be approaching it. But I guess premium is also a growing market as well.
Yeah, no, and they did pick up a non-alcoholic company in 2019 as well.
Yeah.
So they're definitely trying to it's high growth areas, and they've obviously looked at Aviation Gin, saying they've grown 100% in the last year.
Yeah,
their sales.
There's potential there. I think as well, in terms of Diageo, they have such a good track record in terms of building premium brands, and with things like gin, again, it's a spirit, good margins within that company. Can't see why it wouldn't be a success.
Yeah, so on Aviation Gin side, the move definitely a good thing for a few reasons. So the first one being they'll obviously have way more capital that Diageo can offer for the expansion. So they can expand the marketing budget, the production. They can really increase their sales revenue next year.
Yeah.
In addition to this, they'll also be able to expand around the world way more effectively, as Diageo have many brands worldwide. So they have expertise in these areas, and they have the resources to be able to successfully expand.
Supplier links, etc.
Exactly, yeah. And they've done it countless times before.
Yeah.
They can really easily put it worldwide.
Yeah.
So on the production side as well, Aviation Gin can also benefit from cost synergies, like producing in factories.
I would have thought that would have been a real benefit also.
Yeah, so that Diageo obviously have many breweries, distilleries, that kind of thing, all over the world, helping producing. So Aviation Gin could definitely jump on that and could gain those economies of scale for a much bigger factory.
Yeah. So, excellent. Okay, any further thoughts on the deal?
Just really how they're funding it. So the deal's funded through they have 3.4 billion in cash reserves at Diageo.
Yeah.
This is easy enough to cover the deal.
Yeah, no worries there.
Exactly, and half of the fees going to be paid over the 10 years anyway.
Yeah.
244 million.
It seems extremely well structured from Diageo's perspective in terms of the small upfront fee, and then the rest of the deal based on performance. It's interesting that Aviation have gone for that, but clearly it made sense from their perspective.
And as a deal, especially the face of Ryan Reynolds, it transcended the M&A world.
Yeah.
So you search it up and there's countless articles saying Ryan Reynolds brand. So that's also great marketing for them as well, I thought.
Yeah, absolutely.
Interesting deal.
Okay, well, again, a very different story to my one, and it's, no qualms about you going for Ryan Reynolds' sexy gin brand at all. You stick to the sexy stuff, and I'll do the Ancestry.com. But yeah, we'll close it on that deal, and we'll go to our outro. That concludes the August edition of the M&A Monthly Podcast. It's been a pleasure, Mr. Beeden.
Oh, no worries. I was going to say your deal's sexy in its own way.
You're very kind. Hopefully next month I'll go for the sexy one, and you can go for something a bit more, scientific.
Something gritty.
Yeah, something gritty. That'd be good. We'll see what the M&A world has in store for us in September. No doubt there's still a bit of a backlog off those couple of months where we were in lockdown, so hopefully a lot more exciting action. It should be a good one. So we'll catch you then. I think the next one will probably be over Zoom, because we'll both be at different campuses by then, but hopefully the quality will be just as good as today.